Morning, everybody. Sorry to interrupt. I hate interrupting networking, sorry. If you could take a seat, that would be brilliant. Thanks a lot. So, morning, everybody. Welcome to the Credit and Collections Technology Think Tank on our autumn series, effectively. These are part of we run them every 6 months now because we think there's a lot to talk about in terms of, well, we've got a budget next week as well, for example. So, hopefully today we'll give you lots of things to take away and use in your work environment and talk about what's going on and how you can change things or not, hopefully. But I know everybody's super busy, so we appreciate everybody who's here today. So thanks so much for attending. Just a note, on our Sprint series, we also run something called Industry Leaders. So we pick out and work with a number of key associations in the industry, and they help us come up with a list of influencers, people who are seen at events, judging awards, speaking, people who are really making change in terms of the news as well. So hopefully you will all join us we're pleased to announce it'll be in Nottingham next year in May time, so keep an eye out for that. But today, let's talk about people who supported us. So obviously our sponsors are there, Ariza, Exus, Financial Aid, Non-WePlay, Indico Cloud, Trust Payments, TCN and Yakara. Please take a moment if you can today to network with them and understand what they've got to offer, because they're the people who help make this event possible and affordable. So thank you to those guys. Also, a quick note about today's event. So they're all panel sessions, but we've taken away Slido this year just because we feel there will be some surveys on Slido, but we want to, Chris and myself are keen to get the mic into the audience and asking questions to our panel. So feel free to get involved with that. Obviously, I won't explain what's up there, but yeah, there's a break between session 1 and 2. There's not an actual break to go out the room, so please stay seated if you can. And yeah, in terms of our social media as well, we restrict that really to LinkedIn these days. So if you've got any positive feedback, ideally, use that hashtag that you can see on stage there as well on LinkedIn. That'd be great. So enough from me. I'm going to hand you over to Chris, who's going to chair our day and drive the day forward. And Chris will take it from here. So Chris, over to you.
This one working. Can you hear me? So thanks very much, Colin. So we've got a great day today. I suppose just to introduce the day, I mean, one of the things I wanted to talk about was, obviously you see go back here. You see the various topics we're going to talk through around addressing industry challenges, effectively using data, and there's a lunch break which we'll have for networking, and then in the afternoon we're going to talk about value of communications and a bit around what the future means in terms of technology. So we've got a great set of panelists. Before we start, I mean, I just wanted to just pick up here around just a little bit of a review around what happened in 2025, and we sort of pulled this from a bit of a review that we do every single month around some of the hot topics that come up. So there's no shortage of things for us to talk about this year. I mean, my reflection, it kind of feels like there's been just a huge amount that's happened this year. More every year we seem to have more that's going on, and this year particularly from a regulatory space. So we've obviously got vulnerabilities, a topic we'll talk about. There's been the reiteration of Consumer Duty Board reporting. There's been utilities work around Priority Services Register. There's the FOS pricing reform, motor finance ruling. I'm sure everyone knows about that. That's been a massive topic. And then on the right-hand side there's a whole piece around buy now, pay later regulation is going into the FCA. There's a credit information markets study, and of course we've got the budget that's coming up next week as well. So there's no shortage of stuff for us to talk about today. As Colin said, that we're not using Slido for questions. I'm going to try and get out into the audience, so be ready to be doorstepped maybe in terms of think about what your opinion is around what's kind of going on in some of these topics. It's your chance to grill us and to grill the panelists around what do they think and really having a dialogue. I mean, this session is really around having a dialogue and sort of generating ideas as much as we possibly can. We don't have Slido for Q&A, but we do have some questions on there. So if you want to leave comments around some of the topics we're talking about, do go into Slido, look at it, add some comments. There's just a very short survey there. And what we'll do is we'll go back through Credit Connect and basically scrub those and give like a bit of a summary around what everyone here thought as well. So I think that's really the idea. So the first session was around, it's going to be around addressing industry challenges. And really, I suppose, what are some of the topics that have come up this year around what kind of challenges have we been faced. Again, so we've had rising household arrears levels. We saw that particularly in the off-gem reporting for energy. There's been the FCA, the work at the FCA never stops, it feels like. So we've had tougher enforcement, greater use of data, consumer duty has been increasing focus. There's been a new iteration of the board reports that have come out. There's the product sales data that's just started to be delivered as well, which is quite kind of detailed kind of data that's going out. There's the motor finance redress, which is still bubbling through. These are all challenges that the industry has been talking about. And on the right-hand side there, I've just got around some of the operational challenges we had for some of the surveys we looked at. So things like, cybersecurity, aging workforce, and sort of operating costs. These are sort of like challenges that certainly that I've heard this kind of year. So we're going to talk about this, talk about it a little bit more, find out a little bit about what the panelists kind of think around what have their sort of challenges been or they've seen over the last year, and really what does that mean for next year as well. So to kick off, I just welcome the people onto stage. So we've got Claire Aynsley, who's from the CSA. Claire, don't you want to come up? You guys come up. We've got Jason Wassell, who's from the CCTA. Jason, do you want to come up? We've got Amy Collins from CIVEA. And we've got Steve Craske from Jaja. Everyone's very quiet this morning. We're all like, there's like silence. Thanks very much for joining us. So, and I suppose to kick off, Jason, I doorstepped you outside, so I'm going to ask you the first question. What, in your view, what do you think some of the challenges are from 2025? Where do we kind of sit? Some of the things that were on the screen before, do they kind of resonate? What are the pressures you're seeing from your kind of members?
Thank you very much. I'm quiet because I'm Scottish and I'm only just still recovering from that fantastic victory over Denmark, which means that I've spent the last couple of days trying to find out how much it would cost to go to Mexico, Canada, or North America, or do some kind of interchange between them. Thank you very much. My name is Jason Wassell, Chief Executive of the Consumer Credit Trade Association, which is a trade association for smaller specialist lenders, tends to be in areas like motor finance, in retail credit, and in cash lending as well. And all of those issues resonate for me. I'm involved in the motor finance redress conversation. I'm involved in the regulation of buy now, pay later. I'm involved in access to credit and financial inclusion. All of those issues are absolutely. We started the year with no break, and it has continued on. I was in a conversation last week with the Credit Information Governance Body. I'm on the working group. I'm on the advisory council. They said to me, what do your members think about the new subscription contract that's going to be going out to all lenders in the near future? And I said, this is heresy. I know this. But this is number 7 on a list of issues that are more important. There are 6 of them that are more important to my members and are existential threats to my members, and you're coming to me with a new one. Constant addition of more regulatory issues to talk about.
So it's just the pressure and the sheer volume of change that's kind of been going through has been sort of the main kind of challenge. Claire, just from a CSA point of view, what have you kind of seen?
So we represent debt collection and debt purchase companies, and I think what we're seeing, certainly in terms of customer behaviour, is the raft of misinformation that they're finding on the websites, template letters and other consumer forums and other social media platforms. And actually what we think is happening is customers, rather than seeking out legitimate debt advice, they're going on the internet first, and that is creating such consumer harm. It's quite scary. That's top of our agenda at the moment, is trying to deal with the misinformation that's out there to try and support consumers, but also support members. We had one member tell us that they had over 2,000 DSORs sent to them in one day by a particular company, and it's just to slow down the debt recovery process. It doesn't help consumers in any way, but they're being completely misled by this information. So I think that's top of our agenda at the moment.
Yeah, and Steve, I suppose just from a creditor point of view, what kind of pressures are you seeing on the customer base, or even from a business point of view, that sort of, I mean, how are you handling all the regulation that's coming through? I mean, like, certainly, I mean, the product sales data that's just gone out, just started to go out at least anyway. I mean, there's huge amount of work that's being done in the background that probably even the general public's not aware of.
Yeah, and I think with all of these types of things, so yes, the intensity, the frequency which these changes are coming, but the level of detail that's required in them, the number of people who have to be involved. And I don't know how many people were like directly involved in doing the PSD reports, but like jumping from question 168 to 7B to 19F, it was very, very painful, and it took a lot of people to get us to a place where we were confident on the data. And with all those things, there's a level of ambiguity as well. So we try and do all of that whilst we're trying to run a business and seeing, you know, the false information out there. You know, we get lots of, should we say, scripted communication from customers. Sometimes they don't even bother taking the brackets out, and it'll still say, I owe X pounds. And, you know, from our perspective, we can't give financial advice, so it's a really difficult thing for me to be training my frontline team to be able to handle those scenarios and try to get to the right thing for our customers.
What about things like arrears levels? And I suppose, and we talked about customer pressure, and particularly around energy levels is one of the things that came up, and people really struggling with the cost of energy and falling behind on energy, which I know is a different sector, but it does affect affordability. I mean, how does it sit from a customer point of view? I mean, what are you seeing there? I mean, is it getting worse, or is it getting better, or is it just stable versus this time last year, do you think?
Yes, so interestingly, it's quite stable. I think what we are seeing is that people who are struggling financially are struggling more than ever. And that point of being financially okay and not is not moving much. But I think those people who are in the struggling bit are really starting to struggle a little bit more. So, you know, things like distribution payments from debt management companies have almost halved over the last year. But actually, in terms of true delinquency, we don't see the impact just yet. But I think for like 4 or 5 years, we've been predicting it's coming, right? I think this is probably the first year we've predicted it's not. Yeah. So who knows?
So it's a continuing sort of separation of like people are in arrears is getting worse, but then the people, but it's not necessarily impacting overall volume. It changes the distribution rather than the average.
I think so. And, you know, maybe some of that's the space that we play in, but I definitely think we see more impacts around seasonality as well. So, you know, like a simple one is Christmas. So we always see people miss payments over Christmas, and then you see the cures in January and February. Well, I'm not expecting to see a cure as well in January and February this year, because those small life events, which I know Christmas is sort of planned out, but it doesn't happen that way. They're the sort of things where people really start to struggle now, whereas we had a little bit of resilience to those type of things before.
Yeah. And then Amy, from an enforcement sector point of view in particular, I mean, sort of like further down the collections life cycle, I mean, what kind of pressures are you kind of seeing with either member firms, but also when you're out there sort of with customers as well?
Yeah, so I think from an enforcement perspective, our main challenge at the moment is public perception. So, of course, we have our friend Martin Lewis, who claims that somebody defaults from council tax and within 5 weeks it's with an enforcement company, is completely untrue. But, of course, he's the voice of the people. And what we're trying to do as an association is to, you know, widen the education, if you like, on what enforcement's about, the number of communications that local authorities send before someone actually faces enforcement, and of course all the things that we do at the compliance stage before an enforcement agent actually has to attend. So I think public perception is our number one challenge, and then I think also we're behind the debt collection space in the sense that we are currently voluntary funding oversight from the Enforcement Conduct Board, but there's actually a government consultation which is now closed on statutory regulation. So certainly next year we are working to prepare our members for regulatory oversight.
Yeah. And I suppose that comes back to the point around regulation in terms of, I mean, is regulation becoming overly burdensome? I mean, and where does the line become for that versus, I suppose, protecting consumers? Because it does feel like we've got a lot more than we ever had before. It keeps on increasing. I think most people will probably say initially, at least anyway, it's probably been a good thing from a customer point of view, from a process point of view. But at what point does it tip over to sort of costing more and sort of causing consolidations in firms and sort of like just just becoming overly burdensome? I mean, I don't know if you had a comment
Yeah,
on that.
absolutely. And I think, that's one thing that the Enforcement Conduct Board need to think about. They're currently proposing standards on vulnerability and ability to pay. And I think with a lot of the things that they are requesting, whilst it's right, consideration needs to be made for the smaller firms. You'll hear me say this a million times if you ever hear me speak, but we haven't had a fee increase since 2014. And whilst there's one on the horizon, I think it's really difficult for our smaller member firms to be committing to additional investment in technology without a rise in fees.
Yeah. And Jason, I know we've had previous conversations around this. What's your kind of view around, like, when does it become too much? I mean, are we at that point already, or does it depend by sector, do you think?
I think it depends by sector, but more importantly for me, it depends on the size of the organisation as well. I think we've got to give some credit. Consumer duty in our sector, in our space, has definitely sharpened thinking. And people, I think, are looking for the problems, looking for the areas on the consumer duty where there can be problems, where things have not worked well. I think we've seen some positives there, but then we've also seen how that has developed in things like affordability. The affordability, I think the expectation from the FCA had always been that would tighten the market a little bit, 10 to 20%. But we know from certain markets, we've seen a reduction in lending volumes of 80 to 90%. And that means that there are communities that need credit that are not going to get credit. And we can see it in other areas like PSD you mentioned, but there's so much more data requests and data information requirements out there, and that becomes a barrier to entry. It becomes an obstacle for those that want to get into the market as well. Consumer duty is a new lens, a prism that means that the FCA can look at everything or anything and say, we don't believe that this meets the standards of the consumer duty. And usually that's the question to you. Do you think that this meets the standards of the consumer duty? Always a loaded question, which is the answer they're expecting is, no, I'm going to remove that or I'm going to change that. So there is so much there. And I think what that means is that, yes, there have been advantages for some, but there will be many now that no longer have access to those products, to that credit anymore, because of the way that regulation has changed. And as I said, that's even more difficult or pressing for smaller lenders that don't have big teams that can work out what all of these things mean. And in particular, don't get me started on outcomes-based, principles-based, that move towards that, which is all about interpretation and then reinterpretation 2 years later when we find out that we got it wrong, or the FCA believes that we got it wrong. Now let's go back and review that. And let's go back and redress that. So, yeah, definitely some positives, but a lot of negatives there.
I mean, the government I think this year sort of promised to cut regulation by 25%. I think it was right at the very start, I think, of the year. I mean, has that happened? I mean, Claire, maybe just rather than the same question, I mean, what's your kind of view on that? Because it feels like there's been good intentions around taking out the amount of regulation, reducing burdens on business. I mean, has that really come to pass, or are you sort of echoing what Jason kind of said?
Yeah, echo what Jason said. I think it sounds good, but nothing's really come to fruition. We did actually ask the FCA about this 25% reduction in costs, and they kind of replied with, oh, but that's across all regulators, not just financial services, as if to kind of like brush it under the table and think, well, we don't need to look for cutting costs anywhere near 25%. But that's just, it's not the case. They have a responsibility. So in our response to the FOS reform, the many FOS reform consultations, we've recommended that that FOS is subsumed into the FCA. And that's one bold way that government can actually look at reducing costs. And it also gets rid of FOS to a degree, who are everybody's pain in the backside at the moment. Let's be true. So yeah, I don't think anything has come yet, and I don't know what it'll look like, even if it does.
So I suppose that's kind of a wait and see. I mean, the other kind of impact that regulation has, and particularly, I'm thinking here particularly about the product sales data, which is a quite granular data that's kind of gone out, is does technology offer us a way of sort of helping us monitor compliance? So although the regulator, it feels like, is using the technology to monitor the firms and find more areas of non-compliance, do we have to respond as businesses to, in terms of like using technology to now sort of demonstrate things or understand our businesses in more detail? I mean, Stephen, I don't know.
Yeah, 100%, and we're in the AI space, so we like to try and automate as much as possible. But what I would say with the complexity of PSD, it wasn't about jumping from one question to the other, it was the interpretation of the questions and the data source that was needed for them. So even in our scenario, we did it all, but then we still got a consultant in to mark our homework, because to your point, in 2 years' time, we'll have misinterpreted it. And I think that's a real challenge, is we can deploy technology and AI in some places, but I think with regulation it's very, very difficult, especially in the first stages when they're first coming out, to get on top of it. I think after that it's a little bit easier, but with the sheer pace of the regulatory change, it makes it very difficult to ever get onto a level playing field.
And how should we think about that retrospective kind of review? I mean, we saw that kind of a little bit with the motor finance ruling that came out as well, which we'll talk about no doubt later. But you can think you're doing the best, but then when you get reviewed, you find out that you didn't, and then you have to go back and then correct things. I mean, what's the best way of sort of insulating ourselves around that potentially happening? Because it does seem like it kind of happens.
Yeah, and I think if we underpin all of this stuff with the intent rather than the execution, we know what the intent of all this regulation is, right? It's to try and get to better outcomes for customers. So we always try and look at it with that lens, not necessarily exactly how every single word's been written. Otherwise, you take away the ability to create equity over equality for customers, which is another part that we need to do. So we just continually then review what others have done, what feedback's come off the back of it, and then just constantly tweak as necessary. I think if you ever sort of get to a position where you feel aggrieved that you got something wrong and it wasn't quite right, the level of ambiguity that's in regulation means there's always going to be stuff that's not quite right. You just have to just adapt and push forward with the next bit.
Yeah. Jason, did you have it? You looked like you were deep in thought, at least. Anyway, if you looked like you wanted to speak.
It's an area that we've talked about before. It goes over to FOS as well in terms of FOS's interpretation. We're in an area where if you said to me, like, what is affordability, I could point to the 1.5 sides of regulation that the FCA gives. But if you were to say to me, Jason, what's the true regulation around affordability? I could say, well, I've got 10 sides of A4, which is based on the experience of individuals that we've worked with in the past. And that's the true interpretation that the FCA uses, what you should do to verify income, when you should verify income, how you look at expenditure. All of that is not written down. All of that is done behind closed doors. It is very difficult, particularly for smaller lenders who I represent, to kind of understand that, because we don't have massive teams that can break this down and work out what every single word means. We want more direction. But in terms of how do we kind of reduce that, we're going to come back in 2 years' time and tell you you've done it wrong. If they spot something, they've got to move quicker. They can't do what they always do, which is, we're going to do a review. That review is going to take 6 months. We're going to write a report. That report's going to be 3 months. We're then going to do some kind of informal consultation. That's going to be another 3 months. And now we're a year down the track with a problem that we could have identified and worked on quicker, earlier.
This is for the firms to do that? Or
this is for us all to do this.
For all, yeah.
This is for the FCA to do this. This is for FOS to do this. This is for firms to do this. We talked about wider implications. It was something the CSA, UK Finance, we all talked about wider implications. We should be able to spot these quicker and work on them quicker rather than waiting for a year and then taking 2 years to come back, or 3 years, or in the case of motor finance, 15 years to come back and actually resolve the situation.
So that's a question of almost like transparency, honesty, and then speed around, and trust, I suppose, around sort of addressing the issue.
We're being asked for a culture change. We're always consistently being asked to change our culture. The regulators need to change their culture as well. That's my soundbite. I'm going to take that and put it on LinkedIn. I like that. That's a good one. I'll use that one later on. I just made that up, but we should definitely do that.
Amy, I'm going to come back to you also about the enforcement piece, but I wanted to go to Claire first, just in terms of like, what's your kind of view on that from a a collections agency point of view, or from a collections industry point of view, in terms of like the whole trust and transparency and around, I suppose it's trust with the regulator, isn't it, around how do you work on these issues, be more transparent around issues. You're not meant to hide issues anyway, but how do you do that and just like improve the speed and sort of honesty around fixing things as quick as possible or flagging things as quick as possible?
I think to Jason's point, it's hard to place a huge amount of trust in the regulator because they do take too long to identify when things have gone wrong. And, you know, if you just look at TSB as a prime example, you know, there was harm, consumer harm going back 10 years, and it was only last year that they were fined. And, you know, there were no, when you look at what the FCA found that TSB were doing and what they fined them for, you think, but that was so long ago. You know, the practices have changed because the regulations have changed. And so I think, you know, it is quite difficult to place trust in regulators. I mean, we've got a few issues at the moment where I'll go back to misinformation, where the forums aren't regulated, so the FCA can't do anything. The influx of DSARs that are being made, the ICO, we've gone to the ICO and they've said, but, you know, individuals have a right to access their data, which is absolutely right. But when it's actually blocking up the system, you know, where is the trust that we can place in the ICO to do anything about that as well? So I think that they're putting barriers in firms' ways to carry out their own business effectively.
Yeah. And Amy, I was going to ask a question around, particularly for the enforcement sector. I mean, sort of like technology is coming in and sort of changing the sector in quite a big way. I mean, and we're recording more than we've ever had before. I mean, you've got, you know, cameras, all sorts of things like that. The amount of data is kind of exploding, and something used to be very sort of like door-to-door kind of, people-orientated kind of business. Not that it's not people-orientated, but the data is exploding. Where do we draw the line on things like ethics and those kind of things in terms of like what to record versus not? We're talking about transparency of issues, but I mean, does the technology present a problem for that sector as well in terms of, you know, consumers coming back wanting to see the data? We talked about DSAR requests, all of those kind of things. I mean, what's the dynamics of what's happening there and what could happen?
Yeah, so absolutely. So, you know, from an enforcement perspective, as you said, Chris, body-worn video, expected by all of our local authority clients to be recording all calls. That's all calls as well between mobiles, the enforcement agent and the debtor. So there's so much data that's being retained. What I would say is before that information was gathered, there were so many complaints about, you know, the enforcement agent said he would break into my home and take all my goods, you know, various different things. And now, of course, we've got that information to be able to actually refute a lot of those complaints. We do get a lot of subject access requests by debtors for various different bits of information. We have to be very careful because a lot of the time we are recording third parties. So we have to be really careful when we redact the information and send it out to the debtor. But actually, I think from our perspective, whilst it can be onerous and it can be costly to record and retain all of that data, it's actually to the best interest of the industry.
And so we touched on right at the start around perceptions of the industry, you know, and perceptions of particularly this space as well, which is sort of driving it. But I know that the CSA have done work around, you know, what the perceptions are around, you know, the collections industry in general. I mean, do you think the extra data and technology is going to help perceptions, or do you think it's because you're sort of like you're fighting the perception with more examples, real examples? Is there a way of using that to sort of help the sector in terms of what the perception is externally?
Well, I'm hoping that the Enforcement Conduct Board will help us do that. So as part of this voluntary oversight, they are gathering data every 6 months from every member in the industry. And I'm hoping that when they go to publish their first data return, that it would actually, you know, address some of these misconceptions that a lot of people have about enforcement.
I mean, and Stephen, what's your kind of view around, I mean, the whole piece around the perceptions around collections, particularly the collections function, is because it acts as a bit of a hesitation for people to call in and get support. Do you think that's sort of fading in sort of more of the early stage collections space?
No, It's a short answer. I think it's so easy to sensationalise and stigmatise collections that while other people can launch adverts and make money from, we can write off 90% of your debt just like that. Customers are not generally educated on finances. So when they see a TikTok, an Instagram, an advert that tells them it's this easy, that's what they believe, and they genuinely believe that we are out there just to get them, and we want to try and trip them up. I think with some customers you do see a difference. I think customers who are more digitally engaged and you can provide them information. I think those customers are now more open to having conversations because they're gathering the information themselves rather than having somebody on the end of the phone tell it. But on the flip side, we can use technology. As an industry, we're not very good at educating. I think that's something that has to change. And we've launched a rewards program, and one of the core pillars is about using credit responsibly. So we're trying to teach people how to use credit, teaching people what it means to miss a payment, but also teaching them that if you do miss a payment, if something happens, that people are here to help. And generally, I think people who have been in arrears, who have missed a payment, who've got back up to date, are very open to speak to us again and being really, really open with their circumstances, which I think is a little bit of a shift of what we've seen in history.
I mean, what more do we need to do? Maybe ask Jason and Claire around that whole. I mean, you talked about education piece there around like changing the perceptions, because certainly one of the comments I'd heard before was around sort of digital as an example could kind of help because people feel more comfortable to raising issues, so that can help with engagement. We'll talk about that a little bit later. But what more can we do to sort of break down that barrier to get support to people quicker? I mean, is there even from a PR point of view?
Well, I think it was positive to see the government come out with financial literacy, but really what does that mean? And you're talking about educating people in school, but what about the adults? It's the adults that need financial literacy and help in that area, not just, at school level or even college level. I think in terms of perception, we've all got our own jobs to do. And I think that it's down to each individual firm to encourage their own trust with their own customers. And the only way that they can do that is by having, the right culture. Yes, I mean, does technology bring compliance costs down? I really don't know. I'm very sceptical about AI, I have to be honest. But it is, it broadens your scope. So using technology to identify if a customer is vulnerable or whatever it may be, that's absolutely fine. But don't just rely on that, because human intervention is so important. And that's what each individual firm needs to do, to boost its own perception that way.
I mean, it does feel like the technology can help with education, but it can also, as you're talking around sort of like complaints coming through or people like using obscure legislation that they've searched or found out about, that they can then use that as a weapon against you, which you then have to counteract. Could be misinformation. That's probably a better way of doing it. I mean, linking into things like CMCs as well. I mean, Jason, you've been sort of quite vocal in previous sessions here around CMCs and that sort of. So how much is the FOS changes going to help? How much did it help? And we sort of saw a surge in CNC complaints, and then it sort of like, it seems like it's come down, but there'll be more changes coming through in terms of like complaint compensation schemes, haven't there?
Yeah, I think so. Somebody said to me, I was at an event last week and I was speaking, and a couple of weeks ago, and somebody said I was very negative. And I thought that was very rude of them to say that to me. But sometimes I can evaluate myself, and I can see sometimes I can be a bit negative. I would say there's been some real positives in the way that the FOS is changing and some of the reforms that we've seen around that. The introduction of the case fees for CMCs was a piece of work that took years. I remember being at a discussion with the chief ombudsman at the time, and them saying, we're going to take this off the table because the law doesn't allow it, we're not going to do it. And ourselves and the UK Finance, the banks, we both said, keep it on the table, the law might change. And the law did change, and we got the change in, and now CMCs have to pay to access the system, and that is a piece of injustice that has been dealt with. That is great. I think there are a bundle of other reforms that are going on, which I think will be really useful. We've already seen that in terms of the numbers. The numbers fell off a cliff as we head towards the case fee, the introduction of the case fee. It will start to pull back up, but there are definitely a number of reforms that we can't get into today that I think are going to impact CMCs, and that drives complaints. It is quite clear that that claims culture has driven the number of complaints over the last few years.
And it also feels like, at what point do we stop having this almost like adversarial kind of approach, which is like the claims culture, or I suppose is, trying to, be aggressive into your lenders, I suppose, versus more collaborative approach. I mean, it feels like, at some point does it become more adversarial, or how do you sort of take the temperature down?
I think the unfortunate thing is we have a set of deadlines, we have a set of processes that don't allow for that conversation. Previously, in years gone by, the CCTA actually had a role in being a mediator. We used to kind of talk to the customer, talk to the firm, and try and find a way through without it going to FOS, without it being escalated. But the process doesn't allow for that now. We've kind of moved to a very kind of adversarial process, with the FOS being an inquisitorial authority, not just a judge, but also an investigator as well. And they've kind of made that clear. So not just considering the complaint in front of them, but the complaints that they can find. So they will say, the complaint wasn't upheld, but we found this over here, and we're investigating that instead. So it is a quite difficult process for us to have that kind of more collaborative approach.
And and it feels like we've got adversarial, and yet we've sort of also got principles-based on the other side. So it's kind of a different complex mix, isn't it, for firms?
At the very base of this, we have two different standards. We have what the FCA does with its regulations and outcomes, and then we have the FOS that's fair and reasonable. And there's two different standards. And that's at the very beginning, there's going to be a flaw. There's going to be a disjoint. There's going to be a point at which it doesn't match up.
So when we look at hot topics over the last couple of years, I suppose, in terms of, we talked a lot about regulation this year. One of the topics we've always seemed to talk about in historical years has been vulnerable customers, treatment of vulnerable customers, those kind of things. I mean, it doesn't feel like that's been as top of mind this year in terms of being a challenge for people as it has been historically. I'm sure it's not gone away, but where do we kind of currently sit with that? I mean, Steve, what's your kind of view on that? Because it feels like it does feel like it's been evolving, but maybe not quite as visibly as it was.
Yeah, and I think that's because when it first started becoming a focal point, people had gaps, so it felt like it was much bigger. But I don't feel like the FCA have sort of calmed down on it. I think that they keep pushing forward at the same pace. I just think the foundations that people have built now have made it much easier to be able to manage and help vulnerable customers. Again, the challenges are a similar one to what we've seen elsewhere, which is customers claiming they are vulnerable. Like trying to do an assessment on a customer who tells you they are vulnerable because of the cost of living crisis is quite difficult. And generally, in the same vein, they will want you to capture that information. So I still think there's lots more to do on vulnerable customers, and whenever you get inconsistencies across the industry, we're going to see negative sentiment from customers on how they've been treated. And I think the other bit on vulnerable customers is the volume's smaller. We talk about identified vulnerability and vulnerability in data, but the impact is massive if you get it wrong. For 1-2 individual customers, it can make a massive difference, and I think that's why it always, for me, it always stays really, really high on the agenda. So we put a specific focus on anything that comes out specifically around vulnerable.
And do you think technology gives us a new way of sort of identifying those customer kind of pots? I mean, because the data's kind of there, be it in speech data, or Amy will talk a bit about like face-to-face kind of stuff as well. I mean, you can often see these things as human beings, but it's like, can we now capture that? Can we use that data? How do we sort of use that within our processes?
Yeah, 100%. And there's all the standard stuff like smart routing and all the rest of it, but AI can start to identify intent of vulnerability without a customer telling you. It's at the stage now where you can clearly see that, and it can ask the right questions. Now, should AI deal with vulnerability all the way through? Probably not. But it can capture a lot of information, the same sort of information you would capture before it goes through to an agent. And I've seen examples where it almost looks like AI is showing empathy with people, and it is because it's learning from us, right? So it looks at the interactions that my agents have with vulnerable customers, and it works from there. So they show empathy, so naturally AI should start showing empathy, and it is getting there. So I think even for vulnerability, AI is super, super important.
Yeah. I mean, Amy, what's your kind of take on that? I mean, you've got this new stream of data that's kind of coming in. Can you use the data, or are you still reliant on the human element of that?
No, I think we can use the data. So if I speak for my firm in particular, we're very lucky. We have our own in-house case management system. And so it's based around being customer-centric. So we might get a debt from one local authority, we might get a parking ticket, don't shoot me, from another authority. And the system recognises, oh, that's Joe Bloggs, and actually there was a vulnerability flag last time. You know, was it short-term, was it long-term? And we'll automatically put that case into a hold for a human to review before sort of letting it, you know, work its way through the taking control of goods process. I think as well, what we mustn't underestimate is the value of the doorstep. And certainly for us in our industry, if individuals fail to engage with the local authority and it works all its way through to us and they don't engage with us at the earliest opportunity, it's not until that enforcement agent is on that doorstep seeing the circumstances in which someone's living in or their capacity to handle or digest the information that's being given to them that actually vulnerability is flagged.
Yeah. So, and when we look out into, I suppose, the back end of the, I mean, so where's this taking us? I suppose where's it kind of taking us? I mean, Claire, what are the things you think we've got to watch out for?
I actually think that firms identify vulnerable customers very well. I think there's obviously been huge improvements over the years, but I think they do it incredibly well, and I think even the regulators recognise that. It's quite often that we hear from the FCA and from the likes of FOS, debt collection complaints are very low. Debt collection companies, whether it's debt collection or debt purchase, they are very good at identifying vulnerable customers. I'm not entirely sure, and this is me being honest, how much tech plays a part in that. But I assume that most of our members have some kind of technology and voice analytics and that kind of thing to be able to identify it. But I actually think they're very good. I really do.
I mean, trends for us to watch as we go into the new year. I mean, Jason, what do you think? Before we get to questions, I'm going to go to questions in a minute as well.
Sorry, I didn't pick up that question.
What trends do you think we've got to watch out for into 2026?
It's difficult to say, and I think it's difficult because what we're talking about is there's not one customer group. I think we've already seen earlier on that there are different kind of groupings out there, different levels of vulnerability. I'm in a sector where you were kind of saying about vulnerability, you were saying it's quite quiet. I've had at least 6 conversations this year about vulnerability with 3 different FCA teams. There was a team that was looking at the guidance and how the guidance should be changed, the guidance that was there from 3 years ago. There was a team that was looking at customized and tailored support and how that works for vulnerable people. And there was a team that was looking at consumer duty through the lens of vulnerability. So, and none of those teams talk to each other. They're all different. No, they didn't. That's been a bit rude. But they weren't the same team. They were 3 different teams all talking about vulnerability. So vulnerability is still high on the agenda. And I work with some sectors where the FCA will just turn around and say 100% of your customer base is vulnerable. Just start with that as your assumption. Start with the assumption that every single customer that you're working with is vulnerable. And then vulnerability becomes less useful. Then you're into multiple vulnerabilities and trying to identify or kind of categorize different types of vulnerability and put kind of different weightings to it. But I think the FCA are getting better at thinking about this because I think they're starting to realize you can't say 50% of the population are vulnerable and then you've got to kind of add more to it. I think we might get more of that, which I think will be useful.
Yeah. So a lot of the conversation we've talked about this year is definitely been around just the wave of regulatory change that's kind of come through, and like how firms and sectors are kind of reacting to it, what that kind of means for business. I'm going to come out now just in terms of like, what are some of the questions that we haven't talked about or we haven't asked that are sort of burning within the sector? So I don't know if anyone wants to kind of go first in terms of like questions we might have. I mean, anything that I haven't asked that we want to ask these kind of guys before we start? Before I come down and going to doorstep someone.
Hi guys. So product sales data has been mentioned, and probably Jason and I have had a couple of discussions on this before. What is the panel's view now that from the 11th of November, most of the big creditors and debt buyers supplied their whole back book to the FCA? The granularity of a credit agreement level, that the FCA have got more big data than most of the firms in this room. In my sector, the debt management sector, we've got to do the same thing in Q1 next year. You mentioned DMPs and lower contributions. What happens when all this data is reconciled by the regulator, and what you think the impact or repercussions are going to be on that with that level of insight, and how they come back at you guys, both and members really of the different trade associations?
Yeah, I think we're going to look for inconsistencies between different businesses. In terms of big data, I'm really not sure what the intent is, because they have a lot of information from a lot of companies anyway on how we work and how we treat customers. This feels much bigger than that, but I'm not really clear on their intent right now. But I definitely think they'll be looking for people who are outliers. When we're talking about specific metrics, they'll pick it up very quickly, and I suspect we'll be back in touch with a couple of companies to understand why, so they can re-benchmark where the industry should be on some core KPIs that will come towards the end of next year.
Yeah, I would just to say, I think outliers is exactly the phrase that has been used by the FCA to us. I think they're looking for outliers. That's worrying for specialist lenders, because our default rates and arrears rates are going to be higher. So are they going to focus there? That absolutely is a focus. I think we've been quite, from a step back from this, the amount of data they have the budgets and the information for just about every household in the UK will be sitting with a government organisation. And from a kind of political, personal political point of view, I kind of worry about that much data being held by a government organisation. But that's about Big Brother, isn't it? I'm a big fan of George Orwell and, all that kind of stuff. But I do think it's a massive amount of info. I don't think they know what they're going to do with it.
How do you think that's going to play out next year or into the year beyond that? I mean, because you're right, there's a lot of information that's out there. When we always chatted, I always say I'd put that into a pivot table and I'd find the outliers, and then that'd be a purpose of how I'd then sort of look for risks. I mean, how do we need to respond for that, and what do you think is going to happen sort of once they get access to that, start looking through it? I mean, that's almost like a worst case scenario using your George Orwell kind of. I mean, do you think that how likely do you think that is, and how worried do you really need to be about that?
I think you need. I mean, I'm giving them more credit than they deserve, I guess. They would need to understand the data to kind of do the kind of things I'm talking about from a George Orwell, kind of perspective, a Big Brother kind of perspective. I think at the beginning is going to be the easy stuff, which is, here's a bracket. Let's go to one side of the bracket. Let's go to the other side of the bracket. And I think that's the problem. That's the risk, is there's got to be no nuance. It'll be, let's just go to the edges and let's tackle that. And there'll be other things that will absolutely get missed because they won't understand the data that they're collecting.
I mean, the other piece to your point, Stephen, was around definitions, right? So the definitions might be slightly different, even though they might be written down. The definitions are going to be slightly different between different firms, and so you're going to get into all of that kind of complexity that goes through. So I'd heard that maybe that might take a while to work through, I would think.
Yeah, and look, I think the FCA are putting a lot of pressure on themselves, right, by collating this level of data. They have to do something with it. So that's going to be a challenge for them. But just because you've been negative before, if we to take a positive slant there, right, one of the things that we find in the industry is inconsistencies. So, you know, maybe some good will come out of it in the sense that they can demonstrate some businesses who do things really well and can share that information to uplift the industry as a whole. You know, that's if you're going to take a positive slant on it. Whether that'll actually happen, I don't know.
So what else do we need to focus on for 2026? Any comments from the floor here? I'm just going to, Sam.
Yeah.
Glad you made it. Glad you made it.
Thanks.
I saw your LinkedIn post.
My worry with product sales data is the outliers, but are they going to bracket the outliers correctly? So subprime will be an outlier against prime. Will they be the target in the same way that payday lenders were the target historically, and the unforeseen consequence of the rise of the loan shark? Or have the FCA learned from that, and actually they are much more on the front foot now? They've got all this data, and they know that it has to be bucketed because they understand that credit for all means that there is a huge sector of the population that with more and more regulation is being priced out of finance, and they are fully aware of this problem. So to put the positive spin on, do we think they're there yet? Do you think they can help us and get credit for all?
Hopefully. I mean, it doesn't take a rocket scientist to work out if you're going to subprime lending, your default rate is higher, right? So I would hope they don't need billions of rows of data to tell them that. So hopefully that they'll do the other stuff. They will bracket, because the level of information they've asked for, they can bracket the information. They can really slimline what they're looking for. Whether they know to do that, whether they will do that, whether they'll open the hood and it'll be super, super complex and they don't do it, I don't know. I hope so.
I think the experience doesn't give us hope, and you being positive doesn't help. I've got to be positive. So, and I can't on this one, because I think I am worried that they will. They jump to assumptions, even on things like fair value when it comes to consumer duty. One of my members has 100% vulnerable customers. They will answer the phone within a minute. All of their call centres are in the UK so that people can understand exactly the consequences and the situation those people are in. And yet they had to explain that to the FCA, why that was important, why they couldn't rely on like call centres across the world like the big banks do. They'll answer your call in maybe 45 minutes if you're lucky. They had to explain why these people need to talk to people, understand the circumstance, how difficult it is to raise these questions and how you need to get to them quickly and be there for them. And they had to explain that to them, had to explain to the FCA. Once the FCA heard that, they understood, but the first thing they saw was, how much is it costing you to communicate with customers? Well, these customers are vulnerable and there are reasons that conversation had to be had. So I don't think they do put one and one together, two and two together. It's going to be up to us to explain it to them, explain the processes and how they work and what the consequences are.
I mean, that's the consequence of large data, isn't it? The fact that you have so much data, you sort of get to generalisms, and we'll talk a bit about that in a later session, but it's like there isn't one brush for everyone, one size fits all. You've got to have that sort of nuanced understanding from a sector point of view.
Can I come back with a positive? Because
please do.
A positive is that financial inclusion and access to credit is probably higher on the agenda than it's ever been. And we're talking about it when we talk about motor finance. We're talking about if the smaller lenders go, the specialist lenders go, they're not getting replaced. The big lenders are not going to provide that credit. And I think those messages are getting across. I think we're seeing that in small sum lending as well. I think more than ever, there's an interest in access to credit, which is positive and something that we should all be supporting.
So we're almost out of time on this session. I suppose just to be optimistic and positive to finish the session, as we talked a bit about that. What's the outlook for next year? What's top of mind as we go into next year? And we've got given that we got the budget coming up as well, which might change things. But what's your focus into 2026? Amy, do you want to go first?
Yeah, so I think from my perspective, focus in 2026. Certainly from the Civil Enforcement Association is to continue to try and educate the public on enforcement. I think obviously, like I said, we're behind you guys in the sense that we will be subject to statutory regulation at some point next year. So we'll just be working with members to support them and make sure they're ready for that level of oversight.
Yeah, Stephen.
For me, it's just about using more tech to support. You know, a lot of customers want to be serviced with technology rather than over phone now. So you just need to make that available for them and make sure we're servicing customers on channel of choice.
Yeah. And Claire maybe.
Yeah, I kind of think what's going to come out of the motor finance redress scheme is going to have a huge impact next year. Are we going to find organisations looking for the next PPI, and you know, how is that going to impact on things? You know, even that redress scheme, because it goes way back to 2007, you've now got a clash between data protection law and the redress scheme. You've got firms that have complied with data protection law in their retention policies and now unable to perhaps, you know, go back and find that data. So are they now being tripped up by the redress scheme? So I think there's going to be quite a bit of fallout next year on that.
It sounds like a busy year next year as well, doesn't it? And Jason, maybe finish off.
No surprise, motor finance is going to be high for me. I could spend an hour talking about that. But it's not just about the commissions, but now these CMCs and legal firms have information about millions of people, and that information will be trawled and used. I can see affordability complaints. I can see other unfair relationship complaints coming forward. They've spent millions, tens of millions. Much of that is international money, has come from international investors abroad. That money has to provide a return. And if you've actually seen what's going to happen, you know, Martin Lewis is telling you, well, the CMC started with, you're going to get £19,000 if you've got 3 or 4 agreements. The FCA says it's £700. Actually, look behind that. Most people are not going to receive anything, and that is going to be a surprise to them. And so there's real problems there from a reputational and next step perspective there. Vulnerability is going to be an issue. Access to credit is going to be an issue. For a trade association like us, we constantly got to push for tackling regulatory burden, tackling regulatory uncertainty as well. And that's certainly what we'll be doing next year.
Okay, well, thank you very much to all 4 panellists. Really appreciate that. I hope that was useful for folks. As I say, it sounds like it's a busy year next year, just like it's been this year, and so certainly sort of addressing the challenges we've already got. So thanks for giving them a can. Thank you very much.